Oopsie. Hello everyone, welcome to this little YouTube video kind of going over what we went over in class. Bear with me while I kind of get this set up on the right screen. Sorry, I had it set up from class earlier. So for those of you who are still unclear on how to take the signals, there are a multitude of signals for myself, Elvis, or Pat. Pat and myself typically give less signals because we're swing traders for the most part. I will start doing some scalping live on the calls that we're on in the morning. That's just kind of for play and for learning and for fun. They're not part of the six-figure challenge. Now, in terms of Elvis's signals, I highly recommend, hold on, let me shut my office door. My little guy's here. Okay, sorry about that. I can hear him on the phone with his buddy. Anyhow, so in terms of like Elvis's signals, they've been really accurate. So, you can take those based off of 5% or based off of smart risk management, based off of calculated, the safe trader trades anywhere from 1 to 3%, 5 to 10 at the max. Those are your decisions. But needless to say, their accuracy definitely outweighs their inaccuracy. So please do, take advantage of that. Any signal that comes into the group, your job is to analyze it according to your rules. And if you don't have rules, you should not be trading. It's as direct and as loving as I can be about that. So when a signal comes in from anybody, including myself, your job is to see if you see it. If you see it, please take it. If not, then skip it. Sometimes you'll miss out on money, but sometimes you'll miss out on a loss. So, you're going to learn as you go. So having said that, Pat's signals and Elvis's signals are just for GP. They are for general growth. They are meant to be, traded according to your, what I would call my everyday account, where I'm just trading it slowly and wisely. Now, the six-figure challenge trades are meant to be a lot more aggressive. They're meant to be a lot more open and a lot more self-managed, if you will. So when you get a trade, what you're going to do is you're going to go over to the compound sheet. You're going to choose the column that says 55 pip take profit and use that lot size for whatever your account balance is. You're going to use that column, the row, as long as your account balance is equal to or greater than that number. You will use the lot size that is in the 55 pip take profit column. From there, you can manage, re-enter, exit at your own discretion. Now, I would recommend always being a safe trader because these are higher risk. You're better off closing out with a tiny bit of profit than it hitting your stop loss where possible. So if you're up by 10, 15, 20 pips, please protect those. Worst case scenario, you get knocked out early and you miss the move, but at least you didn't lose money. So that's, again, totally up to you. Now, in terms of stop losses and take profits, most of the trades I call will be good for 100, if not more pips. I'm saying 100 because that's kind of been the minimum. But either way, some of them are a couple hundred, some of them, 100. So ideally, you should be getting to knock off 2 of the rows off of that compounding sheet per one trade, which would make it about 5 weeks with no losses, granted, to hit 6 figures. More accurately, it'd probably take about 8. This is a public venture and it's a lot more psychology in it. So needless to say, there are a lot of people who are withdrawing, some of them who have withdrawn 5 figures already. And there are people we've taken losses, we've taken some hits. It's hard, especially as you compound. A loss on row 20, that one hurts versus a loss on row 3. So it's real life. We can't promise 100% accuracy. I mean, my accuracy maintains above 90%, which is the best I could hope for. So that's where I'm at on that. Now, in terms of the 2 signals called this morning, because I do want to keep this short, I know I talk fast. I apologize. I'm working on it. Right here on the charts, we have EURCHF on the 4-hour chart. Now, granted, when we called it, it was up here, and I mean, it dropped it. It's now testing that whole low of the day theory. A lot of scalpers dream right there. When it hits the low of the day, we bounce up for 10, 20 pips, and that's really all it did. You'll notice that this is not a fast mover, so it's not going to put your account in massive amounts of jeopardy, even if it goes against you. So for those of you who entered late, the gentleman in the group, I believe it's Mike, no worries. Like, there's no perfect anything. And the more you guys try to get that, the more you're going to lose. So somebody in the class this morning said they believe the entry is more important than anything. To an extent, that's right. But to me, accuracy is more important than anything. My entry means nothing if my accuracy is crap. I could have the best entry on 100 losing trades, and that means absolutely nothing. So getting off of that soapbox, here's what we're seeing on EURCHF. So this is the triple arrow kind of setup that I have on my chart here. We have weekly and daily dots. We also have our triple arrows. So that's 1, 2, 3, 4, 5 in terms of the 3 arrows. We have our 8 and 18 crossover. That's 6. We cross below the 33. That's 7. We have officially broke the 50. That's 8. And we have some momentum volume candles. That's 9. So if we had some fractals on here, you'll notice we broke those fractals. That's 10. And we are officially breaking that trend line. So if you guys can just imagine me drawing a trend line, I don't want to mess up my screen, but it did break that trend line. That's 11. So looking down to our oscillators, our ADX, our momentum is up right where we want it. Our sellers are in control and our buyers are weak. But here's the best part. When it does this, like this peak of this rejection, if you will, so it's a peak and a peak, so it's rejecting, that's beautiful. That's exactly what we want to see. So that's, I don't know, what is that, 12? Our RSI is below the 50, that's 13. Our currency strength indicator is saying that EURCHF is stronger than the euro. What number is that? Now I'm going to count in public, 13. We do have a crossover on our MACD, 14, and a break of the 0 line, 15. So just on this chart setup, we have 15 confirmations. Does that mean we're guaranteed to win? Absolutely not. Anything can happen. EURCHF is a safe haven currency, but this is NFP week, so good chance of it kind of flowing up a little bit. We can't control what the market gives us. We can just say this looks like a good trade. So here's what we're seeing. Worst case scenario, it pulls back, total of maybe 30 pips. We're looking for it to drop anywhere from 100 pips to 170. I think as we go to a higher time frame, the thing is, all we're really wanting out of this is, can we get a safe 50 pips? So can we take a trade that has a close to guarantee of giving you your 50 pips? And the answer in this case is yes. So a minimum of, oh, sorry guys, it's my magic mouse. Okay, there we go. A minimum of about 79 pips is what we're looking to accomplish, maximizing of, maybe about 155. So how you would trade that is, if for whatever reason you get knocked out, let's go down to the smaller time frame now. No problem, wait for a pullback and ride it for another 50. If, for example, some of us were in profit, I think now it pulled back, so we might not be in profit, I'm not sure. I'm not on that account. Like I said, I wanted to eat something. So if, for example, now it drops, okay, we took our entry up here. We take another entry when it breaks another low, okay, anywhere from up to 20%, provided you were watching the margin available on your account. You would easily be able to say, okay, this is it's not just gonna drop. I mean, it could potentially, it could do this. But what we're looking to see is something more along the lines of this, where it kind of ups and downs and ups and downs. So when it pulls back, it makes another up. Okay, you can take another entry. If you've got your safe 50 pips and you can say, hey, wait a minute, I'm still seeing that everything is lining up, or everything is relining up again, you can take it for another 50 pips. Most of us will get 100 pips plus out of this. So that's what we're seeing on this. I'll even go to this real quick. Bear with me. Let me go to the right trade. EURCHF. So again, similar thing. This one doesn't have the arrows per se, but here's what we're seeing. Our currency strength indicator, we did kind of cross and we even came back to retest, and now we're rejecting. And that's what we want to see. Not fond of how the euro is pointing up, but again, that's what this pullback is. I'm not concerned. So here's your sellers are on our auto trend, on our auto forecaster trend finder. We have a crossover, a break of the 0, and we already saw that the ADX is perfect. It's exactly what we want. So on this one, I don't have the arrows. I just have my EMAs as well as my weekly and daily dots. And there you go, weekly, daily, 8 and 18 crossover, momentum candles down. We then cross the 33 and the 50. So we've done that. Getting a retest is very normal. It's something to be expected. In fact, I plan on it. Like, I don't super freak out about the entry. I don't freak out about the pullback, because it's just a matter of stress-free trading. It depends on who you want to be. So when we look at these setups, that's what we're seeing. If I go to a different setup here, this one's the Ichimoku, but why not? We'll go here. So we do have divergence. If you guys can see, that's a lot of down arrows. I'm not a super big divergence trader, but we officially have the TK cross. We're below the 50. And we also have the orange arrow is my 8 and 18. So kind of the same large story, just a different way of seeing it. I'm going to keep going to whatever. I know one of these has it, or maybe I'm wrong. Looks like I'm wrong. That's strange. I don't have that open on any single chart. Well, I do have a support. Oh, I know what chart it is. Here we go. Let's do this. Man, oh man, we were playing with this earlier today in class. So let's pull EURCHF onto this chart real quick. Okay, so here we are. Let's go to a more reasonable time frame. And here we are. So you guys will notice we're breaking below this 4-hour support. We don't really have anything to stop us for, let me keep shrinking for quite a while. As you guys can see, there's not a lot of major supports and resistance in this zone. So that's free fall. It doesn't mean it's not going to pull back and play around it and mess with our heads a little bit, but it's, you know, in general, that's free fall territory. So continuing forward, let's go to the hour. Let's see. So we're bouncing off of that, you know, zone, which is again to be expected. But what we're looking for it to do now is we retested that zone. That's trading in the zone mentality and all that stuff that's taught and bought. Now we're just waiting for it to drop. So not uber complicated. Definitely, I feel it to be a safe trade. Trade it if you can see it. If you can't see it and you feel like we're wrong, I'm not mad at you. Like we very well could be. So 124 pips, you know, anywhere from that to 162. I would definitely not have my first take profit set until about 60 to 70 pips. So in this area, where kind of price stalled out a little bit. And that's a pretty safe area to be. So that's what we're seeing on that one. And then that's what you're looking at. Your stop loss would potentially be anywhere above this. And how you do that is up to you. I mean, technically, we could let it make one more high because it's not a fast mover and it won't blow your account. So the value per pip and the amount of pips it moves per day is not so much that you're going to risk your entire account. So let's be mindful of that too. So from where price currently is, that's 57 pips. Even if we went a little bit higher, one moment. Hey, Nathan, honey, please tell Noah to be home in 1 hour and not be late. Thank you. I love you. Okay, sorry, he's, you know, getting his independence. He's 9 and he thinks that his watch is a good reason not to be on time. So anyway, so 79 pips is probably what you're looking at, even if you wanted to give it a little bit more room to breathe. I don't foresee that happening, but again, I don't make the market. I'm not in charge of it. I don't get to decide as much as I want to, but we've rejected off of that. We've got a double top, what they'd call an M formation forming, and that's where we're at. So that's what we're seeing on EURCHF. If you see it, take it. If you don't, skip it. If you feel as though it's probably wrong or it's not worth the risk, don't. So EURJPY was my favorite. It's much cleaner double top for starters. Same story, different pair. Let me just bounce on over here. Maybe. So this is an engulfing move. Like this is a powerful move. This tells us what the market is doing and where it's going to go. So for it to come up and retest, again, not a fast mover. It shouldn't scare you to death. No big deal. I mean, you'll survive it. We all will if we all just chill out a little bit. But let me zoom back out just a smidge. We officially broke the average daily low, and you can see that it's red. We have a perfect kind of M formation. This would be that tip there. And now we're looking for it to kind of probably come back up here, retest before it drops. Will it happen? I can't guarantee that. We can just kind of count our confirmations. We've got triple arrows. Yellow weekly, this one even has the 4-hour dots, and so those are also saying so. So those are your triple threat dots in terms of those who like to trade that way. We have our crossover beautifully, kind of clean and fresh. So you're catching it in the freshest spot, which is exactly what we want. And again, we already retested this zone a couple of times. It didn't break. Coming down to our currency strength indicator, JPY is abnormally strong. Euro is bouncing up a little bit, but it's weak, and RSI is below the 50. We have our perfect crossover. We broke the 0 line on the MACD, which is what we want to see, but we all know that's not quite enough. So we came back up, retest. Now we're recrossing to break the 0. So this is kind of very appealing to me in terms of how I trade personally. So again, some similar story with this. Everyone's a little different. I liked this pair because the amount of potential, okay, is extreme. So I'm looking for a minimum of about 150 pips with more accurately, okay, we're going to get a lot more out of this. So 150 pips, give or take, okay, is going to be enough to maybe skip ahead 4 lines on that compounding sheet, which again doesn't seem like much, guys, but if we can skip 4 lines based off of 3 trades, so let's just say 3 trades are worth 10 per week, give or take, it would take 3 or 4 weeks for you guys to hit enough to withdraw your large amounts of money, whatever that is for your level of life. So again, we're looking for a minimum of, oh, sorry, come on, a minimum of 150 pips, and then, you know, anywhere at least 250. But how you trade this is, again, up to you. What's odds are going to happen is it's not just going to say, here's your money. What's going to happen is it's going to come down, it's going to come up. Oh, hold on. Hey, I see that. Can I call you right back? I'm making this video for the signal. All right, I'm back. He called to say, hey, we're in profit, we're in profit. Yeah, we are. Thank heaven, huh? Oh, anyways, back to what I was saying, double top. What it's going to happen, it's not just going to, here's your money. It's not going to happen. I mean, sometimes it does, and in hindsight, that sure is pretty. But odds are it's going to come here. It's going to retest up here. It's going to drop. Okay, probably not even hit. Well, that's enough pips. That's 130. Okay, 120-ish. And then here it's gonna bottom out, pull back up, take another entry. Okay, take another 20% because you closed. It's gonna come down, hopefully surpass this area, boom. Then it's gonna come back, retest this area. When it does that and it doesn't break this area, okay, so that's 119.073. And you guys can come back and watch this video in a few weeks. If it breaks this area and then retests on it, please take another 20% entry, and boom. Okay, that's all you're going to have to do. So based off of 3 trades, 4 trades a week, and some of them being worth 2 to 3, you know, 2 or 3 rows. So it's 4 times, let's just say 4. For anybody of you guys who can do math, that's 12. So 12 times 3 is 36. 36 trades is just shy of 6 figures, if I'm not mistaken, based off of 20% and a $200 account, I think. So that's no losses. So let's go and round it up to 40 trades. But that's how I've done this, is in super stressless. Again, on this pair, where do you put your stop loss? Totally up to you. Count up your confirmations. If you see it, take it. If you don't see it, don't take it. And no hard feelings. Sometimes you'll miss out on money. Sometimes you'll be like, haha, I knew better. And then you'll feel real good about yourself. So your stop loss would be looking like a pretty big stop loss, but either way, that's a choice you make. You want to wait for the pullback, wait for the pullback. Keep in mind, we got in somewhere around here, so our stop loss wouldn't be as big, just so we're on the same page. Either way, it's not about our stop loss, it's about our accuracy. So I can go to my other chart setups to show you what I see. Okay. So similar concept, double top, beautiful, perfect momentum. So we knew this wasn't, I mean, hindsight's 2020 always. I mean, you gotta love that. It's like my saying for the last 2 weeks, but we were pretty sure this wasn't what we wanted it to be, because notice there's no momentum candle in this. Okay, so here, it's kind of a bad example, but similar story. There's a momentum candle, but it didn't kind of quite come. This momentum candle is what, twice as big as that one, give or take. That's how you know it's going to move. So we kind of pulled back, and everyone's probably trying to sell, including myself, like, and that's fine. We made some money and got out, but we didn't have that oomph. Here we have the oomph. We have the momentum. No hard feelings if it comes back and retests 50% of that. In fact, it probably should come back and retest 50% of that. So, but again, to follow this up, we have my big white arrow. We have our double top, daily, weekly, crossover, break of the 50. We're now hitting here, but we broke that fractal level for those of you who can see that. And ADX saying sell, momentum is high, exactly what we want. Crossover, break, re-crossover, and we're getting ready to break. This is appealing, like I said before. Sell, exactly what we want. And here we go. So JPY is abnormally strong, and you know, euro is weak. That's enough confirmations for me. I don't need to count to 15 every single time, because you guys have got to be able to, let's pick a different chart setup this time. This is the Ichimoku for those of you who like that TK cross. We're just now getting the TK cross on the 4 hour. This is the little arrow. We do have divergence, okay, and that's a lot of divergence. So we have divergence on That's dumb. Hold on. Let me delete that other indicator real quick. I'm going to delete that one. That's more visually pleasing. So divergence, another piece of evidence, another piece of indication. So that's kind of what we're looking at. If I go to this, one more, this one, with the funky Trump candles, I'm trying to show you in a way that will match Irving's rules and Pat's rules. And I'm not a fond of these candles personally, but for the sake of your guys' learning, I'm all for doing whatever it takes to make sure we're safe and we're good. So EURJPY doesn't look bad either. I just happen to like this one better, although now that I'm thinking about it, EURJPY plus EURCHF would have been perfect, along with NZD CAD, because then you're touching every pair but US. It's kind of perfect. Anyway, so here's what we're seeing: big arrow, little arrow, yellow arrow, daily dots. I don't have weekly on this chart, so we are looking to bust through this, and as you can see right now, we kind of are. Although again, I don't work with the Trump candles often, but here's what we're seeing. We came back, retested. We already know all that stuff lines up. So if I come here and say, how much are we going to get based off of the Fibonacci lines? We're waiting for it to break through there, probably come to the 61.8, which is 60-ish pips. Pop back up, okay, retest the zone before it drops. Minimum of the move we're looking for is 230 according to this chart. It's about the 23.6 area, which would match where price stalled out over here. Now, granted, everyone is using these Fibonacci tools, but they're using them with different candles and wondering why it doesn't work the same. So these don't work the same with regular candles. They don't work the same with Trump candles, and they do adjust. So if price keeps pushing up, 100% is here, and then 100% is here, and 100% is here. Just so you know what you don't know in terms of how these lines work. They're just fancy support. That's it. Take their accuracy with a grain of salt. Fibonacci is very effective. However, it's only effective when measured accurately. So when we zoom out to see this whole move, what we'd be looking for is for it to break down, come up to the 23. There you go. So I hope that gives you enough of what I see in terms of EURJPY. Remember, this trade is EURJPY. And that's just what we're looking at. If you don't see it, please don't take it. If you're taking it, please watch your margin on your trading account, because you need to be accurate enough that you don't have any issues that you aren't going to blow your account. Because technically we can take a couple of 30 and 40% risk trades if we're trading properly. But if you're not managing, you're over trading, we get a few wrong, which is known to happen. So we already risk X amount of percentage of being wrong. Poor trading only quadruples that risk. So just so we're on the same page. I hope this helps. Let me check my YouTube, see if there's any major questions. Nope, but there's a few people watching. So if there's any questions, by all means, let me know. Otherwise, that's what we're seeing on the 2 euro trades called this morning. Don't see it, skip it. No hard feelings. If you see it, let's compound it. Let's make this one trade for EURJPY. Let's make this worth 5 or 8 on our compounding sheet. 8 rows, which is massively doable because we got in here, breaks down, that's your first 100 pips. You took a second entry, okay, and you maybe left a small portion of this one running, but you closed the majority of it. Took a second entry because you had enough margin, took that for 50 or 100 pips and retest. There you go, just keep doing it. And at least take it to here. Worst case here. Worst case is probably there. Let's find out. So if we're compounding using the 55 pip take profit lot size, even going in one time and taking it to there is worth 3 columns almost. Not quite equivalent because each column goes up in value, but give or take. If you're compounding using the 55 pip take profit and you're letting them run for 100 pips and you're taking a second entry, you're truly gonna understand the flow of your account and the growth of it. So anyways, happy Halloween. I hope you guys do something amazing and fun tonight. Please, everyone, go in the chat and wish Maurice a happy birthday. Let him know you value him and appreciate him, and tell him that his wife is a rock star because they're going out of country for his birthday, which is kind of fantastic. So kind of love that. anyways, that's about all I've got. I'm gonna check on my little guy who is now at some pond far, far away. Well, no, like half a mile, but he needs to learn how to come home on time. So anyways, happy trading. Be careful tomorrow's NFP. Protect your trades. Make good choices. Which is about 100 pip stop loss. Night law. I see your question. So 100 pip stop loss from where price currently is. Let's take a look. Your stop loss ultimately has to be your decision. So I'm going to go back to a more readable chart. This is one of my preferences personally. Let's zoom in. Let's take a really close picture, a really close view. Okay. So from where price currently is all the way up here, that's about 100 pips. And that's probably about as tight as you're going to get that. But keep in mind, you're going to get hundreds of pips out of this. And depending on how you manage it and how you handle it, it's enough to skip a few weeks on that compounding sheet. The whole point of this kind of trading is not to be worried or paranoid about your trades. Yeah, sometimes they're against you for a while. Like this would have been a rough week if you think about it. And everyone's probably freaking out going, oh my gosh, is this going to work? But that's neither here nor there. Like your only job is to make your analysis, figure out if it follows your rules, take your emotions out of it. You know, you can set your stop loss. For me, if it breaks this up here, I got to get out because it's making higher highs. And I know that. So anywhere up here, it's making higher highs. Okay, you can give it a little more room to breathe. Although I don't anticipate a lot of foolery in there, it's possible tomorrow's NFP, and that tends to move all the markets, but totally up to you, which would make that about 150 pip stop loss. I'm writing in regards to, I will definitely send you that stuff for the brokers, for the person who just messaged me. Other than that, that's it. This has got to be up to you. If you don't like this entry, you can take another entry once it pulls back, but just know you might miss the move. You can wait till it breaks, take another entry. Like this has to be at some point independent in terms of how you see the market and your ability to comprehend, to compound, to grow, to manage this trade. So ultimately, that's all you can do is grow individually. And as a team, we're going to be amazing. As a team, we're going to be just on fire. We're advancing, we're understanding, we're collaborating. And I think it was somebody in the group said as iron sharpens irons, so iron sharpens as iron sharpens iron, you know, so does man sharpen man. So that's the whole concept. Like if I had to pick a model for our group, that's what I would do. It would be that. So, but happy Halloween, guys. Go do something amazing and fun. Set up your trades, protect them because there's a lot of news for the US dollar tomorrow, and live, because that's all this is really about. It's just making money in a stress-free way where you can live and enjoy life. So happy trading, happy Halloween, and I will talk to you soon.